Alan, for being with us. So first of all, I would like to know what's your insight of what happened last week here in the New York Stock Exchange?
You know, it was pretty amazing. I've been here 33 years. I've never seen anything like that. I mean, in the 87 crash, and the dot bubble crash, and the dot-com, nothing ever like that. I mean, we fell almost 1,000 points in minutes, 8 minutes. We were standing here watching the tape go down, not pennies, not dollars, $20, $50, $60 at a clip. It was amazing. My take on it, again, no one knows for sure yet. I mean, they're going to investigate this. We will know for sure. I think it's going to come down to fragmentation. When I first started here, if you want to buy or sell Ford Motors, say, there was one place in the whole country, and that was actually right behind us, Post 6. Now, there's 40 different venues, and all of them have different regulations. So what makes this platform, the New York Stock Exchange, so great, it stands out so well, and we saw that last Thursday, is because we have humans. We have humans here that step in and say, hey, wait a minute, let's slow this process down. Let's not just hit every bid. When we did that, the computers that drive everything, on any given day, 70% of this market's computer driven. Those computers went to these outside venues, these other 39 markets, where it's not very liquid, the spreads are big, and just sold it down and down. And that's what happened. I mean, I think at the end of the day, you're going to see its fragmentation, and that was it.
And do you think that after hearings this week of the SEC and the representatives from the main stock exchange of the U.S. in the Congress, what's going to happen next? What measures are going to be taken? Circuit breakers or what?
Well, they're looking at circuit breakers, which will be good. And they're looking also at having the New York Stock Exchange the primary marketplace, which means if the New York Stock Exchange slows down, they all slow down. So I think that they're going to go a combination circuit breakers and New York Stock Exchange. Because again, we're the only venue that has human beings on the floor. Everybody else has computers. So they can't make that judgment call that a human can in times of high volatility. Now we have our own trading platform when things are smooth, like today, things are smooth. That runs perfect. It's just in those volatile moments, which we could see for the next 2 years, without a doubt, with what's going on with the euro. So I think that's important.
And there's also been rumors of a possible deliberate attack against New York stock markets. Do you think that's possible?
I don't think so, the way it traded, because it traded down real fast, which is more indicative of program trading. And if you look at the times, the euro was trading at a 14-month low against the dollar. The yen spiked. So there were a lot of things converging all at once. It was like the perfect storm. And they all converged at once, sold right off, light volume, and then came right back up. So I don't buy that, but anything's possible in this world.
And also this week we have seen that the four major banks have had a perfect first quarter of trading. Do you think this is sustainable? And also, do you think that maybe it's playing against them now that Washington is looking also for that proprietary trading?
Well, you know, you're 100% right. They had a perfect quarter, which is amazing. But when you think about it, they're getting money from the feds for zero, and they're either putting it in money in bonds, which are paying 10 years paying 3.5. So right there, they're making 3.5% without doing anything and no risk. If they want to come to risk, the market, if you look at the latest earnings, that's paying 8% in the stock market. They can't lose. I mean, you look at Goldman. Goldman made $100 million a day for over 100 days, not consecutively, but in that last quarter. It's incredible. But again, they're getting our taxpayer dollar money at zero, and they're either putting it in bonds. Corporate bonds are 5%. So they can't lose. They really can't. Sustainable, once they start to tighten, that's going to change. Let's see how good they do after that.
And also talking about the Federal Reserve, we have seen also this week how the Senate wants to impose more scrutiny over the Central Bank of the U.S. What that's going to mean for Bernanke, for example?
Well, that would take some power away from Bernanke. There's no question about it. There's a big fight going on now. I mean, I don't know which way that's going to turn out. You don't want to see a weak, or worse yet, a political federal bank. I mean, if you look at one of the things in the ECB is that they've taken so long to come to what we knew, everyone knew was going to have to be the fact. They had to give more money months ago. And still Greece hasn't had any money. You've noticed when we had our Lehman meltdown, the feds acted over a weekend, and we had $760 billion to the banks. It diverted a big major meltdown. And I think anytime you politicize the financial world, it's a problem.
And also we have seen a new bailout for Europe. How is this affecting gold? Because now it seems like it's a safe harbor for investments. Do you think the price of gold has peaked, or it's going to go up?
I think it's going to go up. I mean, that's just my personal feeling. You see, when the euro starts to get weaker, we don't think this program's going to work for the euro, first of all. We think maybe short term it's a fix, but long term it's just not sustainable. And I think that's going to influence gold incredibly. And I think what you're really going to see first, you saw last year, you saw India buy 500 tons of gold. I think now you're going to see countries, because they're getting sick of all currencies, the dollar, even though the dollar has a spike, that's a knee-jerk reaction to the euro. But I think most currencies in the world, governments are a little sick of them. You know, they don't trust them. And I think the euro is under a lot of pressure. It's going to stay under pressure. I think those countries that would buy euros are probably now buying gold. I think you're going to see that. Like I said, you saw India buy 500 tons of gold. There's rumors China may buy 1,000 tons of gold from the IMF. I think that's the direction big governments are going to go. They're going to be buying gold for the future, and that's going to put a platform under gold, a real footing under gold for the general public. Because I think you're seeing more public trading. Today we saw a lot of public trading in ETFs in that gold fund. So I think you're seeing more and more people say, hey, gold is a safe harbor. Let me take a look at it for now.
Thank you, Alan.